Well, it's a very big week in earnings, and particularly when it comes to tech. Alphabet kicking off things with quarterly earnings report after the bell today. Then you got Facebook on Wednesday, Amazon on Thursday, Twitter on Friday. Well, joining me now is going to be the very busy man, David Kirkpatrick, Techonomy founder and CEO, and Kristina Hooper of Invesco, still with me as well. David, good to see you.
Good to be here.
Happy summer. I haven't seen you in a while.
Thanks for having me, Alex.
So, of course, it's tech earnings week, so you have to be our first guest on tech earnings.
Well, I'm honored. Thank you.
So, Google after the bell. The first quarter sales growth was the strongest in almost 4 years. Does that sustain?
Yeah, probably. I mean, I think the economy is roaring, and Google is a beneficiary of almost everything that's happening in the economy. So, you know, they have issues here and there in terms of how much they're paying for traffic and that sort of thing. But they are growing in their core businesses. They are growing some of their new businesses. I think it will be an excellent quarter.
To contend with, though, they had that $5 billion fine from the EU. How does that percolate?
It's a drop in the bucket for a company like Google. That's the weird thing. But I don't think obviously it was not in the quarter we're reporting today.
Right.
I think we'll be interested to hear what the management says about the impact of that, whether they expect to see more of that sort of thing. I mean, they'll be pressed on that, but they won't say. Because the answer is yes. I mean, these companies, all these big internet companies, are going to be getting more regulatory pushback, more concern about privacy, in particular, Google and Facebook most of all. But given the scale of profitability of these companies, it's not really going to affect their bottom line much, which is really weird.
But if you're going to see a Google sort of move more towards hardware, to the cloud, that's more competition with Apple, more competition with Amazon, doesn't that wind up leading to smaller profit margins, or at the very least volatility, and then you have that sort of headline risk?
You could look at it that way, but I think it's more like Amazon, Google, Facebook, it sort of are dividing up the whole economy and leaving everybody else in the economy out. So yes, they may compete with each other more, but they will all be doing extraordinarily well as they do so. That would be the way I would think of it going forward.
So that's a hard case to not want to buy tech. Kristina, what do you think?
Absolutely. Tech looks good. And if we talk about revenue growth, if we look out for the third quarter, it has the second highest expectations for revenue growth behind energy. And we talked, of course, about...
And that was bad comps, really. Yeah.
Absolutely. And so tech continues to power ahead. 2019 looks good for tech. Now, it doesn't mean that there aren't vulnerabilities. I think greater regulation is certainly on the horizon for a number of these companies. And in addition, when we look at geographical revenues, technology derives more of its revenue from outside the U.S. than inside the U.S., right? 58% of revenues for U.S. tech companies come from outside the U.S. That's the highest of any sector in the S&P 500. So that suggests some level of vulnerabilities, but no reason not to invest in tech.
But on the flip side, you take a look at Facebook, for example, closed at a record high on Friday. So there comes a point where you're just not going to be able to price in any more good news, right? I mean, is it asymmetric risk, or when do we get to that point, David, where we have asymmetric risk?
Well, with Facebook, I think the regulatory question is more of concern, certainly than Google. Even though Google just got this fine, long term, I would be much more concerned about Facebook, because I don't think they've shown any fundamental ability to manage the kind of reputational crisis they're moving into more and more around political manipulation and privacy. So the weird thing is, I think the company has been sort of lulled into inaction by the extraordinary profitable growth that they've been continuing to see, and the fact that their stock basically shot back up after the Cambridge Analytica crisis. So it was sort of a message, the world isn't really that worried. But I think the world is divided very clearly between Wall Street, which doesn't seem that worried, and almost literally everybody else, which is very worried. That means Facebook will pay some price for that down the road.